Good afternoon and welcome to this session on Picking Up the Pace with Intraday Trading. Today is Thursday, December 1st, 2011. Thank you for joining us today. This is Darrell, your host. In just a moment, we'll be joined by Darrell Jobman, a senior analyst for TraderPlanet.com. The information conveyed in today's presentation is for informational purposes only. It is not a recommendation to buy or sell any trading instrument, and the opinions given by our presenter may change without notice at any time. Please also be aware that trading involves substantial risk of loss and therefore may not be suitable for all investors, and past performance is not indicative of future results. This webinar is being recorded and will be emailed to you, so you will be able to review the material again at your convenience. If you're new to attending Trader Planet webcast, you'll be pleased to know that we have previously recorded sessions on our site at www.TraderPlanet.com. As an interactive event, Darrell will invite your questions at the conclusion of his lecture. Your questions let Darrell know if he's been effective with the discussion and helps as he prepares future presentations, so we hope you'll help him out by sending in some great questions. Simply type your questions within the Q&A frame on the lower right of your screen, and we'll stage the questions for Darrell to answer. As one of our more revered market analysts, Darrell Jobman trades his own personal account and has been involved in the financial markets for over 40 years. A decorated Vietnam War veteran, he was a newspaper farm editor and editor of several agricultural publications before becoming an editor of Futures magazine for over 15 years. He has written and edited more than a dozen books and courses on trading. Now, Darrell enjoys helping others succeed by teaching the do's and don'ts of trading, so if you're in need of his help, you'll benefit from his editorial contributions on TraderPlanet.com. It's now my pleasure to introduce the senior analyst for TraderPlanet.com and our good friend, Darrell Jobman.
Thank you, Darrell, for that introduction, and we will proceed with our topic in a minute, but I do have to cover a few housekeeping types of items. First of all, we have a couple of sponsors today. When I get to the charts, we're going to be using Vantage Point Intermarket Analysis Charts, and the other sponsor is Wassendorf Associates, which is the publisher, of course, of SFO, and also has various books for sale through Traders Press. So you have a pretty good education information package between TraderPlanet.com, the Wassendorf family of services, and with the products that are available online from, as I say, from Trader Planet. Now, the topic at hand today, it's kind of a tough topic because, you know, from a standpoint of where traders want to be and what they want to do. This, you know, I'm going to talk about some intraday trading, which is not my particular cup of tea, but to show you that there are some things that you can do with the charts, and you can do them in an intraday type of trading. You can do that with several different steps, and we're going to talk about that. Now, you know, today we're having a hard time finding some good, reliable trends because we kind of are in one of these jumpy markets where the traders react to the day-to-day media events and the reports that come out. You know, one day there's a threat of default from Europe, and the next day the problem is resolved, and you have these kind of ephemeral reactions to these European, and I'm going to put solutions in quotes because sometimes they seem to be and sometimes they aren't. Just think back to what happened on that October 27 day when they came out of a meeting there, came up with an agreement, and the market rallied, and that lasted all of a day before it faded away. Of course, with the Fed and the other central banks now involved in the latest plan to cover up the debt issue, the latest wrinkle seems to be, perhaps seems to be, I should say, have more staying power. But how long will the current attitude about the latest solution last? I don't know, and I don't know that anybody knows. Now, the Eurozone dilemma overall remains the same as it has been for months. You know, either Germany is going to wind up paying for a bailout, or the Eurozone faces a prospect of being broken up, you know, with a lot of consequences for many different markets worldwide. Now, for us as traders, when we're trying to sit here, individuals trying to figure out what's going on, and we want the exposure we have to this market, or at least I do. I want my exposure to these uncertain conditions to be as minimal as possible. You know, more of a hit and run type of a tactic to shorten up the time frame when we might be at risk with the position. If you're a longer-term position trader, for example, you might want to think about short-term or swing trading. If you're a swing trader, you might want to think about intraday. In other words, you want to get your risk exposure down to a minimal amount. So if we're going to shorten up our time zone, what we need to do, obviously, we have to assess what is the current condition, what is the market up to, and what are we going to be able to do with it. So then, after we have kind of a decision about what kind of market we have, we need to figure out a strategy that will fit those conditions. Kind of like this guy here trying to pick door number 1, door number 2, door number 3. You know, kind of like I think it was a Price is Right. You used to have that program. There's, you know, potentially a great reward behind one, but a booby prize behind another. So you need to maybe move to a different strategy. I have moved a little bit more towards the options side of things in my trading. You know, everybody's going to maybe react a little bit differently. You may need to make some differences make changes in the parameters that you use. Maybe you will have to shorten up your time frame. We'll look at that when we talk about the charts a little bit more. You may need to look at the indicator clues a little more differently. Maybe you want to kind of look at something on a shorter term nature. You know, you may want to also look at taking profits prior to when you might otherwise. You know, the old maxim is let the profits run. Well, maybe that's not the best tactic in a condition of the markets as we have today, because we have so many quick changes in sentiment, which means that profit can evaporate. Now, one thing that hasn't changed is that we have no change in our goal to minimize our risk exposure, but we may want to set up, you know, to do that, we may want to set up tighter stops or quicker exits to cut losses short. Now, what we do know is that we are unlikely to be the first to know about policy changes or about fundamentals, nor are we likely to know for sure how traders as a whole will react to any of this news. So what we need to do is we need to find some kind of a tool that we can use on the charts that will provide us with some indicators as to what the market might do based upon what it has done in the past, the probabilities. And for that, I'm using Vantage Point intermarket analysis software. I know I'm not going to know the fundamentals before anybody else. I know that I probably am not going to interpret them, you know, as accurately as, you know, thousands of other smart traders out there. So I need to look at my tools and kind of make my judgments, my assessments of the market based upon what that tool is talking to us about. The intermarket analysis is obviously very important in today's market because everything seems to relate to the currency markets these days. The U.S. dollar kind of being the key as a reserve currency, but the euro is very much in the news. Kind of what goes on there, what the outside markets, as they call them, they influence a lot of the grains, a lot of the other markets, and so you have to be aware of what is going on with all the various markets, and that's what intermarket analysis is all about. What Vantage Point does is picks out the 25 markets that have the most influence on the target market and then uses a set of intermarket data to provide some indicators that can be used